Okay. A country where labor is not sufficient to make proper use of natural resources is said to be underpopulated. When there is not enough laborers, enough people to make use of the available natural resources, it's said it is what? Underpopulated. Underpopulated. Okay? Now when we have more than resources, opposite, we call it overpopulation. When population is classified according to professions, it is called occupational distribution. Profession. That's occupational distribution. Okay? Very well. I hope you're still with me. Very well. What was added to variable cost to give us total cost is the fixed cost now. We just did that one of our questions earlier. So you know, total cost equals what? Fixed cost plus variable cost. Fixed costs are costs that do not change the level of production, while variable costs are the costs that change the level of production. So you have to blend together to get your stuff. Okay? Revenue is what? Total profit made after sales. Amount spent on production, not spent. You know? Amount of goods produced, not goods itself, not the goods itself. Total money realized from sales. Total profit made after sales. Total money realized from sales. Two of them are similar, but they are not the same. Revenue actually total profit. Revenue is just the income. It's the total money realized from sales. But that total money, you have to take out your revenue from it, deduct your revenue. You have to deduct your profits and your cost of production. But revenue is just the money that enter. And from there, you now separate your profit for your cost of production. Okay? Given that TR is this, then TR minus TRN can be used to find what is that? Function. Try this out. Okay? Try this out. Let's see. Which of the following is the characteristics of monopoly? A monopoly. Who is a monopoly? A single supplier, a single seller, a single producer, single seller, single supplier. Okay, that is a monopoly. So which one is the characteristics? Homogeneous commodity, many sellers, not many sellers. Single seller. A single seller, of course, perfect knowledge is a single seller. It is only one is a monopolistic competitor. You can talk about many sellers, competitors. A single seller. Okay? When a firm is nationalized, that is taken over by the government. A private business is taken over by the government, it's nationalized, so that it can serve more purposes and many people. Former owners are removed without compensation. No, you have to compensate them now. It has the right to draw on state funds from no. It must break even within a specific period. Workers take control of the firm. Former owners are removed without compensation. When it's nationalized, it's supposed to be compensated. The private business, when it's nationalized, is supposed to be compensated. But here it's talking about without. It has the right to draw on the state fund for capital investment. Yes. You know, for all investment, money will now come from the government purse. That is state funds from government purse. Okay? Because it's not a national asset. A practice whereby a business is owned by two or more, that's partnership business. Independent firms, okay, firms now, not persons. If it's persons, that's how a partnership business. But firms, that should be a joint venture, joint business, okay? And now I hope you know digitalization. When government is making indigenous, the general citizen to be part of foreign businesses, foreign investment in Nigeria, okay? While commercialization is when government businesses is now making profits. Not just breaking even, making profit that's not commercialized. Foreign investment, of course, no. We don't mean of that. Companies, government, businesses owned by foreigners. The main objective of privatizing a government business, why do we privatize government? To make it more efficient. To increase the level of efficiency. That's all. This is why you privatize, to make the government business to be more efficient. Okay? You need to waste time with that. The return on investment that is just sufficient to satisfy the owner of a business is called economic profit. Yes, economic profit. The return that is just sufficient to satisfy, not abnormal. That's an economic profit. Okay? Economic profit. Which of the following is a middleman in the chain of distribution? Entrepreneur, producer, banker, a retailer. A retailer, of course. You should know this one very well. A retailer. The entrepreneur is the owner of the business, the producer. Okay? Right? A negative effect of the presence of a large number of middlemen in the distributed network is greater variety of effect of having greater number of middlemen. No middlemen now. We have wholesalers and we have retailers. Okay? Two of them are middlemen. So when we have them in greater number, what is the effect? Greater variety of goods, greater quality of goods, lower price of goods, higher price of goods. The price will go up because every one of them will add their profits to whatever they are buying from producers. So the more we have, the higher the price will go. Okay? In a sense, an example of producer goods is what is produced: tin of milk, loaf of bread, shirt, shoe. Producer goods. What producer needs to produce another thing? That is hammer. Hammer is a producer good. With hammer, you use hammer to produce another thing. Tin of milk is just direct consumption. Loaf of bread, direct consumption. Shirt, direct consumption. The hammer, you use it to produce other items. Okay? To promote development of agricultural sector, government of West African countries should encourage rural boundaries. No, now. This is what I'm experiencing at the moment that is affecting us. If everybody is running from rural area, who's going to do farm work at the rural area where they have mass land there? Discourage foreign investment in agriculture. No, you have to encourage it. Support the marketing of farm produce. Yes. Reduce tariff of food products. If you reduce food imports, reduce tariff. To promote development of the agricultural sector, government of West African countries should support marketing of farm produce. You know, many of our products are not finding their ways to international markets. They are not taking our gari, our yam flour, and what have you abroad to some of our brothers in Canada, in UK, in US, and other countries, part of the world, in Caribbeans. You know. So, if government support them, the process of marketing these products, then our agricultural production and sector will be improved. Right? The most important quality of money is that it must be relatively scarce, it must be generally acceptable, transportable, it must be generally acceptable. You should know this one. Money, in fact, from the definition of money is anything that generally what? Acceptable. Okay? Very well. You don't need to waste time on that. A certain amount of money is needed for everyday expenditure, like buying goods, transporting, and others. That's what you spend on a daily basis. That's called transactionary demand for money. Precaution is money you save for emergency. Money for emergency. Whereas speculative is money for special purposes, like investments, bonds, and what have you. Right? So the answer is A. Very well. Long-term loans can be secured from capital market. Commercial banks, no. Discount housing, development banks, development banks. Commercial banks only give one short-term loan, 6 months, maximum 1 year. They give only small, short-term loan. While development banks can give a long-term loan. Even mortgage banks, they can also give long-term loans. Okay? The value of money generally measured in relation to what money can buy. Interest rate charged on a bank loan, general price level, what money can buy. The value of money is directly related to what money can buy, which is general price level. What can money buy? Alright? Very well. So the following is true under rapid inflation. People demand less foreign exchange, people set up businesses, people rush to pay their tax, people hardly want to lend money. People hardly learn how to lend money. Do you know why? Because when I lend you my money today, by the time you are paying back tomorrow or next week, it has lost its value. What you can buy before cannot buy it again. And then lend money. Okay? The financial institution was originally known as the Building Society. Mortgage banks. Mortgage banks. With this, we have come to the end of this session. Subscribe to this channel, share the links with your friends, and then if you have any question, you can only send messages to us. If you want online tutorial, you can also reach out to us, and we're going to get back to you. Thank you for your time. You're welcome.
Hi, I'm sure you enjoyed the video you just watched. To see more content as that, preparing you for your upcoming exam, make sure to smash the subscribe button and turn on notification. Also, remember that you can use the comment section to send us your questions or your inquiries, and we are happy to take them. I'll see you in the next video. Bye.